Today, our group will be presenting an overview of the Malaysian aviation insurance market. This market is critical for Malaysia's role as a regional air travel hub and is impacted by its high-risk global aviation sector. Our study focuses on two main objectives. The first one is assessing the current state of the market, identifying the challenges it faces, such as navigating complex claims, adapting to geopolitical risks, and addressing emerging cyber liability threats. And the second one is providing actionable recommendations for stakeholders such as insurer, reinsurer, and regulators to enhance market resilience and gain a competitive edge. Furthermore, the report explores opportunities like leveraging insurtech for more efficient operation and aligning products with global ESG standards, especially in relation to sustainable aviation fuel risks and climate-related liabilities. In conclusion, this report aims to provide valuable insight and strategic recommendations to help the industry evolve and thrive in a rapidly changing global environment. Thank you.
Assalamualaikum, my name is Nurdalila Syafiqah binti Muhammad Fitri. My metric number is 300622. I will present the first challenge in the aviation industry is technology and cyber risk. Although the aviation industry is often considered a luxury industry, from a business perspective, it is usually burdened with high debt and highly dependent on digital technology. Nowadays, airlines and airports are increasingly depend on ICT, such as online booking system, flight management, digital payment, air traffic control system, and aircraft maintenance system. In Malaysia, companies such as Malaysia Airlines and AirAsia, as well as airports such as KLIA, use intelligent system for baggage operation, security, and airport management. However, the more sophisticated the system is used, the higher the risk of a cyber attack. In terms of actual incident in March 2025, Malaysia Airport detect a cyber threat to KLIA's operational system. Although flight operations were not directly disrupted, security monitoring has been enhanced by NACSA and CEAM. In addition, the Malindo Air data leak case in 2019 showed that passenger personal information is also exposed to cyber risk, especially when involving third-party service providers.
So moving on to point 3, technology and cyber risk can cause serious operational disruption in the aviation industry. Cyber attack may lead to flight delays, system shutdown, or force in airlines and airports to operate manually, which will affect the efficiency and passenger experience. Next is the data breaches are another major concern, as the exposure of passengers' personal and financial information can result in legal liability, financial losses, and damage to corporate reputation. These risks are further increased by the involvement of third parties such as airport operator, ground handlers, and MRO providers, where a single system weaknesses can impact the entire aviation ecosystem. Okay, so for the point 4, cyber risk can also present the major challenge for the insurance industry. The lack of historical cyber claim data make the risk assessment and premium pricing difficult. In addition, overlaps and gaps between aviation and cyber insurance policy may lead to coverage disputes. A large scale of cyber attack could also cause losses to multiple parties at the same time. Increasing accumulation risk for insurer and reinsurer. Therefore, technology and cyber risk may remain a critical challenge for aviation insurance in Malaysia.
Hello everyone, my name is Martin Benaman. My metric number is 301867. So when we talk about aviation risk in Malaysia, we usually talk about weather, maintenance, or passenger volume. But today, the biggest driver of cost and complexity in our market isn't coming from the runway, it's coming from the headlines. Geopolitics is no longer just a diplomatic issue, it is an underwriting reality. Today, I want to walk you through the 4 specific geopolitical challenges that are reshaping the Malaysia aviation insurance landscape. Okay, first one is, our first challenge is the global market hardening. Some people might ask, why does a conflict in Eastern Europe or Middle East affect a flight from Kuala Lumpur to Kota Kinabalu? The answer lies in the reinsurance market. Aviation insurance is a global pool. When losses amount in Ukraine or Gaza, the capital pool tightens everywhere. We are seeing surge in war and allied premiums, but the scariest part isn't just price, it is the volatility. There are now seeing cancellation notice periods for war risk covering shrinking. What used to be standard 7 days notice can now be cut to 24 or 48 hours in high risk zone. For a Malaysian carrier flying international route, this creates a terrifying scenario with a takeoff insured and land uninsured if a conflict escalates in the middle of the flight. Okay, the next one is the sanction compliance threat. Malaysia prides itself on diplomatic neutrality. We trade with the East and the West. However, the financial reality of insurance is not neutral. Most of our insurance capital come from London, Europe, or the US. This means that even if the Malaysian government doesn't sanction specific country, our insurers are bound by Western sanction regimes. This creates a legal minefield. If an aircraft part, a lease engine, or a maintenance contract have even a faint connection to a sanctioned entity, such as in Russia, it puts the entire policy at risk. Malaysian insurers are forced to act as geopolitical policemen, enforcing rules made thousands of miles away to keep their reinsurance valid. The next one is South China Sea, or we call it the gray zone. We all know the territorial disputes in this region, but for insurers, the question is technical. What happens if a civil aircraft is accidentally engaged by a military asset in disputed water? Standard policy have war exclusion. If a foreign military jet flips a commercial plane during an intercept, is that an accident covered by the hull policy, or is it a hostile act that is excluded? This ambiguity creates a coverage gap. We call it a gray zone risk because in the moment of crisis, nobody knows which policy pays out, and that uncertainty is bad for business. Finally, we have the invisible threat, emerging cyber warfare. Modern geopolitical isn't just about missiles, it's just about data. We are seeing a rise in GPS spoofing and signal jamming near conflict zones and contested maritime borders. If an plane spoof, of course, and enter restricted airspace, that is a massive safety risk. But here is the problem. Standard aviation how policy cover physical damage. They rarely cover cyber physical effect where the damage is digital or navigational. This leaves Malaysia carriers exposed to a new kind of risk that traditional policy simply weren't built to handle. To wrap up, the days of static, predictable insurance renewals are over. Between rising war premium, complex sanction, regional dispute, and cyber threats, the Malaysia market is facing a perfect storm. Our challenge is now to move from simply buying policies to actively managing this geopolitical risk.
Assalamualaikum and salam Warna. My name is Shazun Hani binti Muhammad Sharif with metric number 301451. Today I'm going to talk about the second challenges in aviation market from reinsurance cost perspectives. Malaysian aviation insurers face rising reinsurance costs due to the high value risk involved, such as aircraft hull damage, passenger liability, and third-party claims. Most local insurers cannot fully retain these risks and rely heavily on international reinsurers from London, Europe, and the USA. The global factors like major aviation accidents, rising repair costs, inflation, and geopolitical tensions have led reinsurers to charge higher premiums and impose stricter terms such as high deductibles and lower coverage limits. Reinsurance contracts are typically denominated in US dollars, which further increase costs when converted to Malaysian ringgit, especially with a strong dollar. These rising costs put significant financial pressure on local insurers who ultimately pass the burdens on to the airlines. This affects airline profitability, competitiveness, and ticket pricing. Small insurers are particularly hard hit and struggling to absorb higher retention or meet stricter reinsurance terms, which may reduce market competition. To maintain long-term stability, Malaysian insurers should focus on improving risk management standards, diversifying their reinsurance partnerships, and exploring regional cooperation. Managing reinsurance cost effectively is crucial to ensure adequate coverage and support the sustainability of Malaysia's aviation insurance market.
My name is Phoebe, and today I would like to talk about sustainability in aviation insurance. Sustainability is an opportunity for aviation insurance in Malaysia. The aviation industry uses a lot of fuels, which affect the environment, so airlines are now focusing on more sustainable operations. Aviation insurance can support this by encouraging fuel-efficient aircraft. This plan use less fuel, produce lower emissions, and are generally safer, which reduce accident risk and insurance claim. As a result, insurers may offer lower premiums or better terms. Good aircraft maintenance and safe operating practice are also part of sustainability. Airlines with strong maintenance standards face fewer mechanical failures, making them more attractive to insurers. Climate change is another concern. Floods, heavy rain, and storms in Malaysia increase environment risks, which insurers must consider when underwriting. Overall, sustainability helps reduce risk, lower losses, and support a safer and more stable aviation insurance industry in Malaysia. That's all for me. Thank you.
Hi, my name is Aizul Mustaqim bin Ismail. My metric number is 303632. My section focuses on ESG framework as a strategic market opportunity. This is distinct from general sustainability because it focuses on structured risk management across three pillars. First, on the environmental and regulatory side, we have a huge opportunity to align with Bank Negara's climate taxonomy. This means we don't just insure plants, we insure the transition to net zero, specifically underwriting the risk for sustainability aviation fuel. We call it SAF, which is becoming crucial for Malaysian airlines. Second, on the social side, we are looking at social resilience. This means creating insurance products that protect the human element, covering pilot shortage and crucially data privacy to protect passenger rights, which build trust. And lastly and third, on governance. This is vital. After the My Airline suspension, there is clear need for insurers to act gatekeepers by enforcing strict directors and officers D&O liability coverage. We can force airlines to be transparent and prevent sudden collapse. In short, ESG allows insurers to stop just paying for losses and start enforcing better standards for whole industry. That's all for me. Thank you.
Hi everyone, my name is Kong Hayao and my number metric is 30085. In conclusions, the Malaysian aviation insurance market play an important role in the country, financial and transportation system. However, the market today is not only influenced by the traditional aviation risk, but also by the technology advancement, cyber risk, geopolitical issues, and higher insurance costs. For example, the technology risk and the cyber risk can cause the operation disruption, reduce the customer experience, financial losses, and reputation damage. These trends can require insurers to manage high-value claims and unstable insurance premium. At the same time, insurers face the challenges as limited data for the cyber underwritings, unclear policy coverage, and legal issues that related to sanctions and war risks. Despite the trends, sustainability and ESG present a strong opportunity for the Malaysian aviation insurance to support more safer and sustainable aviation practice. By encouraging a fuel-efficient aircraft, sustainable aviation fuel, and strong maintenance standards so that insurance can reduce the losses, improve industry stability, and expand into new areas such as data protection and D&O liability insurance. Overall, by stronger underwriting and integrating the ESG principle, the Malaysian aviation insurer can better manage the risk and support the long-term sustainability.
My name is Diviraj Arjun Ravindran, matrix number 278152. Now I'll talk about the recommendation. The insurance market of the Malaysian aviation sector requires the shift of insurers and stakeholders because the passive risk-taking strategy should be substituted with the active partnership approach in order to make this market resilient and competitive. To begin with, concerning and the increasing technology and cyber dangers that are observed in the industry, the recommendation is that the insurers should do more than conventional silent coverage. They need to come up with custom-built cyber aviation insurance policies. Such policies must directly respond to the peculiarities of the flight activity, including GPS spoofing, disruption of the service of the navigating signals, and data breach in the area of passenger privacy, established as part of the Malaysian Aviation Consumer Protection Code, MACPC. In order to enhance the accuracy of underwriting, the insurers must take advantage of the current advancement in data analysis and AI-based predictive modeling to resolve the existing gap due to the absence of past cyber claim information. Secondly, to deal with increased reinsurance premiums and dynamic conditions in the global market, national insurance companies need to give priority to diversification of its reinsurers, associations with other global centers other than the conventional Western centers. Regional cooperation may be considered in ASEAN as a way to expand its financial burden by stronger US dollar and higher premium volatility. This will allow the industry to lessen its excessive reliance on international reinsurers, thereby stabilizing the local premiums in Malaysia and sustainable competitive ticket prices of the nation carriers. Also, there is a major modernization avenue through the implementation of environmental, social, and governance (ESG). The insurance are expected to state the incentives, which should be green premium, to give a bonus to the airlines to invest in fuel-saving fleets or switch to sustainable aviation fuel (SAF). On the social front, social resiliency package solutions can be developed, which integrate the loss of license coverage with wellness systems to balance the aviation workforce in the post-pandemic periods of talent scarcity. Last but not least, to avoid operational disaster due to breach of corporate governance as witnessed within recent market exits, the insurers need to use directors and officers D&O liability insurance as a gateway mechanism. Insurers can bring about market discipline by implementing conditions accompanying coverage such as increased degree of financial transparency, independent audit, and adherence to Bank Negara Malaysia climate taxonomies. This holistic approach will not only enable the realization of nation carbon neutrality by the year 2050, but also sustain overall long-term stability and viability of the essential aviation insurance ecosystem. That's all from me. Thank you.